Yesterday we went through and learned about an income statement. If I can have eyes up here. An income statement is the first permanent financial statement that we have created. Okay, and again, permanent financial statements are ones that are going to stay with the business throughout the entire life of the business. It doesn't get thrown away. It's one of those documents that you always keep. The second permanent financial statement that we're going to be doing, which is the one we're doing today, is going to be our balance sheet. And remember, the whole purpose of a balance sheet is to prove our accounting equation. Assets equals liabilities plus owner's equity. Okay? So we know that there are two sides to our balance sheet. The assets, and then you have the liabilities and the owner's equity. When we physically look at this form here, you can see that there are two sides to this form. On the left-hand side right here, we have one column for numbers, and this is going to be where our assets go. On the right-hand side, we have one column for numbers, and that's going to be where our liabilities and our owner's equity go. Now, right here, the owner's equity section on your balance sheet is the #1 problem that students have with this chapter. Okay? We recall that yesterday we learned about our income statement. On our income statement, we went through and calculated how much net income or net loss there is. Who gets the net income or net loss? The owner. Right now we're doing a sole proprietorship organized as a service business. That means we have one owner, and that one owner is going to get all of the net income or will incur all of the net loss. So when we look at this section right here where we're going to put our owner's equity, we cannot take the number from our worksheet and plug it in here and get it to work out, because the owner has to have that net income or net loss affected. So you have to calculate your new owner's equity, accounting for the net income or net loss that we just calculated yesterday on your income statement. So that's the #1 thing that's going to come out about this. But what we'll find is on the left-hand side, we're going to have a total assets, and on the right-hand side, we're going to have a total liabilities and owner's equity. These two numbers need to equal. If they don't, there's been a mistake somewhere, and you got to find and fix it. We also need to remember we're going to be getting these numbers, except for our owner's equity, from the balance sheet column of our worksheet. Okay, not the trial balance, because we know we have to account for supplies and prepaid insurance that have been adjusted by things that we've used up throughout the fiscal period. When we take a look at the very top of our balance sheet, we have 3 lines: name of the business, name of the document, and the date. Yesterday when we did our income statement, you agreed with me we don't calculate on every day what our net income is, it's for a period of time. Now, can we say on a balance sheet that our assets equals liabilities plus owner's equity for a whole length of time, or is it going to be for a specific day? So am I going to say my assets were this amount of time for the whole month of January? Or is cash going to vary every day? Right? Every day your cash is going to change. It's not going to be the same. You're not going to say that you had $7,000 in cash for the whole month of January, because you might have had more at the beginning and fluctuated in and out based on what's happening. So when we think about it, or supplies, we're not saying for the whole month of January my supplies was $300. I'm saying on this one specific day, this is what my balance sheet equals, or this is what my accounting equation is. Because think about it, any day that you journalize transactions, your accounting equation is going to change. It's going to be a little bit different on what is in each account. So a balance sheet is going to be prepared for a specific day. That's also the second most common type of mistake that is made on this assignment, is trying to remember on an income statement versus a balance sheet which one is for a length of time and which one is for a specific day. Okay, so this balance sheet is not very long. We just need to remember that the left-hand side, here our total assets needs to equal your total liabilities plus your owner's equity. Okay, let's go ahead and open up those instructions. And you will see that we have a partial worksheet for Ken's carpet cleaning for the month ended April 30th of the current year. We also have a blank form for completing our balance sheet. I will guide you through the following example. It says, prepare a balance sheet for April 30th of the current year. So we're doing Ken's carpet cleaning, balance sheet, And so let's try 2008. I'm not quite sure why they actually had an 8 in there. So we're going to do the left-hand side first. What I need to do is I need to put my classification of my account. So I'm going to put assets. And notice that the word assets is centered. You are going to have to go through and do a balance sheet by hand, and you will lose points if your account classifications are not centered. And now when I hit enter, it's going to go over to the right, but I'm not going to do the right-hand side. I'm really going to go through and do all of my assets side, and then I'm going to move over and do my right side. So my first asset account that I have is cash, and cash is for $9,500. Then I have petty cash for $100. I have accounts receivable Betsy Russell, and Betsy Russell's $1,650. Then I have accounts receivable Charles Healy for $1,403. Supplies, $2,200. And then prepaid insurance for $6,400. And then I would go through and use my calculator, and I would go through and add up my assets. And again, I'm doing one side at a time. I want to get my asset total before I go through and do the right-hand side. Does anyone have a total for me? What do you get, Marcus? 16513? Or did I hear you wrong? 13153? Really bad hearing today. Thank you for telling me again. Okay, so that's what I have on my left-hand side. Now I'm going to do the right-hand side. On the very top, I'm going to put the word liabilities, and the word liabilities gets centered. And I have two liability accounts. And remember, the easiest way to identify your liability accounts is they have the word payable in it. Okay, so we have accounts payable, linger, and supply. For $548. And then I have accounts payable, taxes by Thomas, $1,111. And then you have total liabilities, so you just need to add up those two numbers. I hope you can do those without a calculator. So I am to the point where I have to calculate my capital. Now, I already talked about my net income. But there's one other account on our balance sheet column that I have not accounted for. What is it? Drawing. Good job, Cody. Okay, so basically, I talked about our net income, and we know that a net income is going to do what to owner's equity? Make it go up. What does drawing do to owner's equity? Makes it go down. Would you agree? So to calculate our new capital, you have to do this on every balance sheet. Number one mistake that is made here. You are going to take your capital from your worksheet. You would add your net income and subtract your drawing. What is our net income? How do we know? It says it on your worksheet. Or if you had prepared an income statement for this, you would look there. So do not take $11,810 and put it there. You have to take $11,810, add $1,899, which is your net income, and then you need to subtract $855. $855, again, is our drawing amount. Okay, so do not take that 11,000 number and put that in there. Okay. Hang on, my computer's being slow, sorry. So again, just to reiterate, I'm going to take my $11,810, which is my capital. I'm going to add my net income, $1,899. Then I'm going to subtract my $855, which again is my drawing. And that number, $12,854, should be your capital. Would you agree? Did we get the same number? Now, when I go through to add up the right-hand side, here's another common mistake that people do. They take 584 plus 111 plus 659 plus 12,854. That's a mistake. Why? Because I have a total here for liabilities. So the only two numbers I need to add together are going to be my 659 and my 12,854. And if I add those two numbers together, what do I get? $13,513. And then what do I see? What do my eyes do behold? But right here, my assets equals my liabilities plus my owner's equity. That's when you get your happy dance for accounting, because your balance sheet is now in balance. The left-hand side equals the right-hand side. Go ahead and try that on your own. I would choose 2008.